Well, thanks for tuning in. We are at the Alpha Ideas 2020 conference, and on the sidelines of the conference, the man who, to my mind, understands consumption better than most, Nikhil Vora, with us to talk about that and more. Nikhil, so good having you. Thanks so much for joining in.
Thank you.
Before we talk about a lot of other things, I'm intrigued by a point that you made in the presentation, which of course will be there on the website too. You mentioned that the listed space is either dying or will be dead soon. Those companies will probably not create value. Don't know about making money on it, but not create value. Value will be unlisted space. Now that's very strange to hear from somebody who's been in listed markets all his life and talking to a set of viewers who actually want the listed space to do well.
Yeah, completely ironic. So I keep thinking about this. I've spent almost 90% of my working life in listed market, so over 25 years in listed market. And yet when I look at the markets, and I've looked at it for some time now, I just feel that India is at the zone where listed businesses are pretty much businesses which have matured and lived the life cycle, and the ability to innovate and disrupt existing businesses is very, very found to be wanting. So I don't see them playing the disruptor role, which is so critical in a market like India, where disruption seems to be the apt thing to do. So, and I keep reflecting this. If I look at Fortune 500, and I've talked about this often, I see 90% of them die or become irrelevant over a period of time. I see listed market in India pretty much symbolic of the Fortune 500 companies. They die or they become irrelevant over decadal cycles. So the market behavior that one has seen over the last 3-4 years, it frankly, while it pains all of us, I'm sure, to all our investors also, but it doesn't really surprise me so much. I think this is something which was just about waiting to happen. It's happened faster than what possibly one would envisage, but I don't see that changing drastically. And I'm not saying as market momentum and stuff, but I think businesses slowly will erode unless they change and disrupt. And I don't see the ability to disrupt existing leadership to be of a very high order, or it's in a very, very few spaces. And I see that happening at a galloping space in private companies, private entrepreneurs, first generation entrepreneurs who are really taking this opportunity to disrupt market leaders. So that's the reason why Sixth Sense was formed, that we thought we will invest in disruptors in consumer space. And so, what I've said in the Alpha 20 ideas is pretty much what I believe in, that I think existing players, existing listed companies, even if they are leaders, their ability to maintain leadership and sustain value of that leadership is going to be extremely challenging. You will have exceptions, but like I always believe, exceptions don't make the rule.
Yeah, but why, just wondering, because I'm intrigued by this, why is that? I mean, it may well be that the current set of examples that you're seeing around in the listed space are not doing that, because being listed is not a prerequisite to not being disruptive, right?
Yep.
So at some point of time over the next 2, 3, 4 years, even large listed companies which would have large profit pools as of now because it's banking on an existing set of businesses could probably throw out a niche or two which could be disruptive and change the model?
Yeah, I agree. So like I said, exceptions will be there. But when I look at broader businesses in our country right now, look at banking. Yeah, you have a dominant leader in, let's say, a State Bank of India or a HDFC Bank and so on. But the disruption in financial services is not being led by an SBI and an HDFC, right? It's being led by players outside that context. It's being led by, let's say, a new age consumer finance company like a Bajaj, which has evolved in the last 7-8 years, or a Paytm in some form, and a lot of other fintech companies as we look at it. So disruption in financial services, which should have ideally been led by existing leaders, it's not being done by them. Disruption in consumer businesses, which is very close to my heart, is not being led by the levers of the world or ITCs of the world and the Colgates of the world. It's being led by new age businesses who are doing it in niche, in spaces which they are very comfortable doing. But the more they get comfortable in a particular niche, the ability to scale becomes more apparent. So a lever is not disrupting space, or a ITC is not doing it. You see newer players. So Aviva is doing it in some form. You start to see it in Bira, for instance. And I'm being biased because we own stakes in these companies. Bira is doing it in alcoholic liquor space. Yes. And so Parag is doing it in milk and so on. These are all relatively new age businesses which have evolved. And you'll see many develop. my fear, and this is true in a lot of work. Look at print, which is very close to you guys, right? Print and media. I've looked at that space. Not a single print player, and we're talking about large existing players like the Bennett Group, Times guys. Look at HT, for example, Jagran. So the top 3-4 players. Not a single player, and maybe I'm being critical of them, so be it. I think not a single player has actually innovated and disrupted how print should be in India for the next 10 years. How Indian consumers will consume print over the next 10 years. They are not going to consume print by reading a newspaper anymore. Or that's becoming slightly irrelevant over a period of time. You've seen players evolve in that category. So InShots has evolved, whereas the leaders have not really done the development. Look at auto, very interesting example. In a world where the top 3 auto companies in the world actually lose money, the GMs and the Fords and the Chryslers of the world, you have it in India, where the largest players, the Tatas, Mahindras, Maruti, for instance, have done practically zero innovation or zero disruption in the category. Autos is a space which is getting disrupted almost completely with the advent of the Olas and the Ubers of the world. And ironically, I remember Mr. Mahindra at some stage talking about the fact that they will have consumption issues because the sharing capability of Ola and Uber will increase, and thereby people will not have cell phone cars. I fail to understand why a forward-looking corporate like Mahindra's could not have created an Ola in India.
But we've seen those examples before as well. I mean, for example, none of the hotel chains thought of creating an Airbnb. Aren't these essentially, I mean, I'm just wondering, aren't these essentially tech companies which have come out and consumer tech companies which have managed to do this? Your complaint is legitimate, maybe that the original product owners could also have thought of being consumer tech, but they have not thought of doing so. But
precisely my point. Hotels, beautiful example of a business like the Taj and the Oberoi's and all chains that we look at, right? They've been static players. They've been brilliant at the product. So nothing taking away from all the guys who've done it, whatever they've done. But the fact is they've been ineffective for the consumer 10 years forward. What have they done to ensure that the customer base that they've established in a Taj or Oberoi's moves along with them? They can move along with them only when Taj sets up another Taj. Right?
Sure, okay.
They've lost a customer because in India, you have a situation where there is just so much of balance sheet which has been invested in our country. So all of us somewhere have invested balance sheet capital, created asset. No one was setting the P&L of that balance sheet, right? Oyo proved that they could create a model. I'm not talking whether Oyo succeeded financially. They've done it in terms of capital raise and so on. But I think they've shown the way of what one could do with balance sheet capital invested in our country. I fail to understand why a Taj or, look closer again to one of our portfolio companies, Saffron Stays. They've created this premium holiday home play, which is about literally all the assets created by us who bought the next holiday home and so on. There's no reason why Taj should not be doing that. There's no reason why Mahindra Holiday should not be doing it, right? They have members, they have demand. They fail to create supply, which is the worst thing that can happen in a business. Businesses struggle when they don't have demand. Here, ironically, we have all leaders who are struggling because they could not cope with the relevant supply that the consumer was wanting. They have demand. A banking channel has demand. That's why you're talking about unbanked bank and microfinance and tertiary banking and so on. Automobiles have it. Ola and Uber are proving that. They've not gone to where the consumer is going. Even if it means pure tech or significantly tech enabled, there's no reason why leaders could not do that. And you had startups doing that role. So I think the failure in India as of now is about leaders' inability to take the risk of disrupting their own existing businesses and the fear of disrupting their own business and thereby losing what they are at today to the obvious risk of actually losing the entire business tomorrow. I think that is very, very ominous to them. And I frankly hope, but I have not too much of belief. While I hope of that, I don't have too much of belief that leaders have the ability to change. It's very, very tough. It requires someone to take that ownership. Professionals very rarely will take that ownership. It has to be the entrepreneur, the promoter who has to take that call. And I hope some of them do.
Okay. So let's drive the conversation closer to where your heart is, and which is consumption. Now, two things. When I look at the set of portfolio companies that you've invested in, they are if anything but traditional. They are not traditional at all, right? And when I look at the listed space, arguably with the fall in the valuations of some of the financials as well, the only pocket, save for IT, which has been meandering at the same levels, the only pocket where valuations have still held out despite trends starting to come off is consumers. Now, two things: how do you see this dichotomy or this things shape up in light of the fact that you probably don't even believe that the existing consumer plays in India will probably have the same success in creating value as the new age businesses would have, which are the kind of businesses that you are investing in?
Yeah.
At 6 cents.
Yeah, so, my sense of this is that when one says that values have got disrupted, India has never, very rarely, let me say that, has been a value market. India has been a growth market, right?
Okay.
So I think all of us somewhere get trapped into believing that value is what we want to protect and we are good at capturing the value. I think our failure is when we don't capture growth along with that value. And to me, Indian market is symbolic of that in some form, that we think that because markets have collapsed, the values are becoming very enticing. I think that's not really the case, right? It's about saying whether the values are falling, where the growth are still sustaining. We don't have that happening right now. So if I look at consumers, or frankly any business for that matter, but consumers because we do that at 6 cents, is that, in the market, in listed market also, while everything around us has possibly collapsed by at least 50%, if not more, over the last 3 years, we've invested in 2 listed companies in the same period. We've made 7 times and 10 times the money in 2 listed companies in the same period that one's looking at. I'm not saying we did something earth-shattering about it, but the fact is that there are pockets of businesses and sponsors which we think are doing or playing the disruption which the leaders are not able to do, and they can't participate in that disruption. So for instance, we invested in contracting. That was our big theme about why consumer contracting will become very large. We believe that the leaders will find it a struggle to grow beyond where they are. They'll not grow meaningfully. If they don't grow meaningfully, then they have to let go of what is tertiary to them, because they need to grow and keep sustaining their brands and so on. So they'll protect the 60% ROI business, which is brands, and let go of manufacturing, which is 16-17% ROI business. That's the great opportunity that we thought will happen. And we've seen that we invested in a company called Hindustan Foods, which has now become possibly the largest consumer contracting company in India in 3 years. We invested in JHS. We've sold that at 7 times, but we invested in JHS, which is the largest oral care manufacturing company in India. They control 15% of oral care. So I think it was about opportunity in businesses, whereas the larger players in the businesses we believe will get disrupted or not changing too much for their own good. We thought there's still opportunity. So I think that is what investors, all of us, need to really look at, which is while there can be mayhem in listed space, or there has been mayhem in listed space,
yes.
But there is opportunity which is getting created because of mayhem. And at every point in time, right, someone's loss is someone's gain. I think we need to somewhere, as investors, because it's all our capital or our investors' capital, and we need to be fiduciarily protecting that as much as possible,
yes,
or do it with the best intent possible. I think there's an opportunity in crisis. There is crisis in listed market, but there is opportunity in listed, maybe rare, maybe few, but there's significant opportunity in guys who are disrupting the listed guys, which is in private. Which
is what you guys are doing at 6 cents. You're trying to get that, buy those disruptors, yeah, and not necessarily follow the listed bucket. Yeah. Okay. One thought though, and last couple of questions, Nikhil. One thought is, one question that I have for you is, what do you think is happening to the Indian consumption space? Is consumption, or is the Indian consumer consuming less right now? Or is it that because we look at the listed markets and look at the volume growth numbers, and those are not shaping up as we thought, that we believe that is happening, whereas that value is being captured by some of the others? Is that what is happening? What do you think is happening?
I think very, very interesting. I've done consumers all my life. All of us believe that, so I'm not debating, but I would challenge the point, which is that all the large consumer companies in India, and all of us look at that as a data point, think that their growth has slowed down from, let's say, around 8-9% volume growth to maybe 4-5%, and thereby they are degrowing. But what are we looking at growth? We are looking at growth of soaps and dish. We are looking at growth of beverages. We are looking at growth in oral care. We are looking at growth in categories,
detergent powders,
cigarettes,
etc.,
and stuff like that, right? That is not where growth is happening. those are markets, those are categories which have saturated themselves. So incremental growth is always going to be slightly price driven rather than volume driven.
In those categories?
In those categories, which are the leadership categories of listed companies.
Sure.
But the fact is that the consumer is changing. The consumer is now consuming products in a very different fashion to what they've done historic. So if growth is happening in, let's say, categories like dips and sauces, is Lever present in dips and sauces? Is Knorr a brand in dips and sauces? It's not. Is Kissan a brand in dips and sauces? It's not. But the category is growing because Indian consumers' taste buds have changed. Because of the Pizza Hut and the McDonald's and the Subways of the world, we all know what a mint mayo is and what a Southwest tastes like. Ideally, Lever should be capturing that space. They have not. It's taken a Biba to take that role of leadership in a space. Maybe Levers will wake up, they will get into that space at some stage, but they've lost that race somewhere. And that happens in every category that one looks at. Look at Bira, closer home, right? We all think that beer has only 2 price points, strong beer, mild beer. Literally, there's nothing else. It's not like alcoholic space where there are multiple price points, multiple categories. But Bira has disrupted a category which is almost owned entirely by United Breweries. I'm not saying they've they've yet cracked it completely, but we think they're on the way to crack it. They cracked the brand, they cracked the product proposition of saying that I am new age. I am funky, I am something which is there for the next consumer. It's not for the consumer of today. So if I drink Kingfisher, if I did, my kids are not going to drink Kingfisher. Not because Kingfisher as a brand is a poor brand or the product is poor. It's just that they will not want to be associated with a legacy brand. So is the case with a Titan, for example, right? Titan, thankfully, is evolving as a company, but as a brand, I would think Titan as a brand in watches will over a period of time struggle. I can't see how legacy brands will continue to effectively use the legacy for the good of growing the brand franchise that they own today. I find that to be a struggle, and that to me brings to me my core thought, which is about the fact that brand loyalty is at an all-time low in India, brand awareness is at an all-time high. A perfect recipe for disruption to happen in brands.
So you're saying that companies should probably try and now fan out alternate brands at every single point of time, invest in new age categories, because that's where the Indian consumer space is growing, and we're not capturing that.
It brings back to me maybe a decade back, or maybe 12, 13 years back, if you remember, when Levers started to talk about the master brand, super brand strategy, getting only 30 brands in the portfolio instead of 110 that they had. And they literally course corrected in 3 years to get that done. Maybe the time is right to actually say that 30 is not good for India. What makes any consumer company think that 30 is great for India? India is a 130 crore pop market. It's a market where the consumers are experimenting. The consumers have a choice, want a choice. Disruption is happening in distribution, so it's no longer the funnel which is becoming critical. So it's no longer the Levers stranglehold. And I'm giving Levers as an example,
sure,
not really
the only one.
So Lever, or ITC, or Colgate, I think they control distribution, and thereby they thought that the product that they put through the distribution funnel was what the consumers wanted. That's not true. The distribution was only an enabler. They did not push brands, they did not push product categories, they did not innovate, right? Because it's tough to innovate when you do well for yourself. You can't disrupt yourself. So I think that is changing. As distribution channels change, I think you'll see a lot more evolution of brands happen, and thereby the customer choice, consumer choice will get met now. Look at what Nykaa and Purple has done, right? In beauty space. Unheard of, right? They were not brands. They were selling Lever brands, they were selling P&G brands, they were selling L'Oreal, they were selling everything around the brands created by all these guys. Today, they are the platform, they are the brand. So Nykaa is the brand which sells, let's say, 2,000 crore of produce. Purple is a brand which sells, let's say, 500 crores of produce or 300 crores of produce. They are the brand, and they will get valued because they are the platform. The platform has become a brand. I can't believe why a Lakme could not have done the same. Or why Mabel should not have done it, or why L'Oreal should not have done it. You're killing your own brand by still targeting traditional ways of consumption, traditional ways of distribution, because the consumer is no longer traditional.
Yeah, that's
He's
true.
changed.
That's true.
I think brands have not changed.
Okay. And I would want to end this interview with one thought of how you are capturing that at 6th Sense too. But just one question before that. Do you believe, two-part question, that do you believe that the revenues, scalability of these smaller businesses, because these are still, some of them are still smaller businesses. They don't have the pan-India presence. They don't have the turnover might. Do you think over the next 5 years, these set of businesses will grow in both and their valuations will grow further, and whether the valuations of the existing businesses will come down? Do you see that happening unless they innovate and reinvigorate?
Yeah.
Do you reckon these 50, 60 multiples are a thing of the present and never to come again? Never say never, but still.
Yeah. So I remember my last call on ITC.
Okay.
This is almost a decade back. Almost, yeah. I'd sell ITC the sell. Not because of anything else, but consumer businesses tend to behave in a particular fashion. They only do time correction, they don't do price correction. ITC is at the same price it was 10 years back. Yeah, businesses have grown, stuff like that, but they're the same price. So the values have not changed, but time correction of 10 years has happened, right? So fundamentally they've underperformed for 10 years,
yes.
Right? I think the same will happen in a lot of consumer businesses. You will see underperformance or time correction happen for a prolonged period of time. It does not crack as much as a lot of other businesses do, because these businesses don't require capital. So, it's almost like a seller's market in some form. So that's always a bit of a challenge. Having said that, you are in the market to make money. You're in the market to generate returns on whatever you invest in. And I'm generally being overcritical of this because I want to make a point.
Sure.
I'm maybe dramatizing it a bit more. But I think what the opportunity is about what we've seen in the last 10 years in India. So you look at, and I don't have the precise number, but if, let's say, listed market unicorns were around 25 or something in India 10 years back, private market unicorn was 1 at that point in time. Today, private market unicorns are 30, listed market are possibly just the same number. Yeah. So values are getting created. Now, whether these are bubbles or these are actual values, which one investor can really tangibly monetize, it's pretty much a question which is up in air right now. Having said that, the fact is that the values are also a precursor for what the business model delivers. Yeah.
Sure.
So I think there is disruption happening. It is slightly silent right now, but it is happening. I think it will become a bit more noisy as we move into it, because the more entrepreneurs start to feel that they've cracked the business right, they know they've got the solution for a consumer problem. Winnie did that beautifully, right? Winnie Cosmetic, which is Fog Deo, they've done it in 5 years. They've done it at the same point when Axe was a leader. Axe sold the product saying that you spray Axe and there'll be 10 girls chasing you. Okay, you smell good and stuff. Fog came in, they said, girls don't chase you, but I'm not cheating you. Yeah, I'll give you more buck for the product that you buy. No gas. They've changed the industry. Right? It took one level of disruption to change what the market would be. Now, Winnie possibly has the ability to live through a lot more product categories.
Okay.
They've become like an innovator in that category. Now, whether they succeed, fail is again up for debate. But the fact is that
they can scale.
The fact is what these smaller players are showing is, and which has never happened in India for 50 years, right? The only disruptor in India was Nirma, which was way back 25 years back. There's no disruptor in India for 25 years. And even leaders did not disrupt their own category. You will see many disruptors happen because each category is calling for disruption. Look at foods, right? Levers, almost zero presence in food. But you will see many players challenge that status. Look at personal care, personal products. You've seen Purple, Nykaa really challenge that status. And consumers are moving there, right? If I was Levers, if I was Sanjeev, I would be worried. I would be worried that suddenly 500,000 customers who were buying offline, who were buying in traditional stores, which is where Lever's strength is, suddenly they've moved online and they're buying from Purple and Nykaa. Customers have moved, companies have not. So I think somewhere the challenge of addressing the customer needs, wants, and attributes is not getting as refined and defined into existing leaders of listed companies as they should have been. And I think that is something which, as investors, I would be worried about. If I was a listed market investor, I would be surely worried about it and maybe saying it a lot more vociferously than what I'm doing today. But I think that's disruption for you. it's not that companies don't disrupt themselves. I think there will be some players who will disrupt their own businesses, or at least be aware of disruption and thereby capture the opportunities. So I look at, not that I have understood the business completely, but I look at InfoEdge, for example. I think they've done a beautiful job of what they were doing as of now. They had a milking cow in Naukri, if I remember right.
Yeah.
And they moved into it. They moved into Policy Bazaar, they moved into other categories. Makes complete sense of what the market was calling for. I think that is what you want leaders to behave at. You want leaders to evolve and change with the times, which I regretfully, the existing players have not really done a great job of.
Okay, lastly, how are you doing that in Sixth Sense? You're looking at businesses which are, and I'm just trying to figure out how are you choosing businesses, even if it's within the private label, because that will give some inkling to our viewers about how maybe they can try and apply those rules at the public level.
So what we are doing is pretty much what I talked about, that we are looking at disruptors in some form, and we're not really looking at people who are trying to create an innovative product in India and thereby change the way India consumes. We're not looking at that, right? We're looking at the fact that India is a great market. India is a 2% market, right? And that is very, very strong in our mind, that India is a 2% market. 2% of consumer behavior needs to change to a different mode of consumption, and that will create one of the largest markets in India. If 2% of large consumer companies start to think that contracting is the way to go, that will create a huge opportunity for contracting companies. If 2% of the market starts to think that drinking a new age beer is a great product to go with, we'll create the largest beer brand in India with Bira. If 2% of India thinks that dips and sauces is the market to go with, Viva will by default be the largest category play. So I think we've looked at a lot of those players. 2% of India starts to say that feminine hygiene is a category which needs to get a lot more penetrated in not just rural India, urban India too. We'll create a great category pull in Pari, which is Soothe Healthcare, which is what we've invested in. So we've tried to invest in pockets which we believe can become large by its own nature. Obviously, given the fact that these are still nascent businesses or early stage of disruption businesses, I think some of them will really evolve and crack it. Some of them may possibly survive from where they are today to scale up 10 times, and then maybe they'll plateau out. But that's how markets are, right? We hope that the businesses that we've bet at Sixth Sense will have the ability to live through longer. We hope to obviously monetize from them. We obviously have an objective for our investors, and we'll do that. But I'm very happy with the way we've construed ourselves to be. We've not gone wrong. We've not faltered too much till now. Hopefully we don't. Maybe we do. But we just think we have a higher probability of cracking it right, because we think we are betting on sponsors who've understood where the consumer mind is going 5 years forward. And that to me is the only way that a consumer company can really evolve, succeed over a period of time.
Disruptive talk is all I can say. Nikhil, thanks so much for taking the time out and speaking to us today at Bloomberg. I really appreciate your time.
Thank you.
Viewers, thanks for tuning in.